for 2024 earnings. As you can see, going into the earnings, Tesla was down 2.26%, but after hours, it it increased to about 2% to 3% ish, and then after the earnings call, it went up even further. So as you can see, the initial increase once earnings was released was about 404. Then it went back down. Then the earnings went went to a high as 411 when Elon was speaking, and then it's kind of plateaued since then. So why is Tesla earnings up? That's the real question, because if we see, EPS was expected to be 0.77, but they reported as 0.73, so it's actually a minus. So they actually missed earnings. Obviously, that's not great. You'd expect the stock to be down after that, but the reason is a lot of it wasn't as bad as you might have been otherwise expecting, due to based off the delivery report, because the delivery report was a massive miss. But then what saved the delivery report was they had energy deployments, which was really good. But so if we go straight into the earnings report, right, we can see the full year profitability, 7.1 gap, 1.6, 1.6 in Q4. Again, there's nothing amazing about that, but it is good. We did see that we saw 0.6 billion, due to their Bitcoin gain. I thought it was going to be more than that, but so they must have sold some. I know they did reduce it. It was I think it was in 2023 when their cash flow was a bit iffy. So they did reduce it. I was expecting more of it, but maybe that's because we also had Bitcoin increasing past December into January. So obviously there might be some unrealized gains to do with that. Free cash flow of 3.6 billion. Now that's for the full year. 2 billion of that was in Q4. Now that is really good, considering earlier in the year they did have a negative quarter. Obviously they were massively invested in AI during that. I think that was Q2, but they went negative for a bit, and they instantly bounced back. So that is a great sign, and is partly reason why the earnings are up. The stock is up. Was because although earnings was a bit disappointing, free cash flow remains strong, and as long as Tesla is able to continue to invest into artificial intelligence at the rate it is, and still produce, having money to spare, is a really, really good sign. Obviously, another reason can increase their AI training compute by over 400% in 2024. That is amazing, because obviously a lot of Tesla's valuation is built in to their premise that they're going to solve full self-driving. So, and if they don't, obviously Tesla is not worth anywhere near where it is at now. But the market is pricing in that it will be first to market. Obviously, the energy business had a record Q4. They reduced cost of goods on their vehicles to 35,000. So although they did miss, there are a lot of good little snippets that the market was looking at to be like, oh, okay, yeah, that stock goes up. So it's not as simple as just the earnings missed, then stock goes down. This is why I never, make bets going into earnings. If I just generally buying, if I have money, then I'll buy. But I'll also buy after. It's not like I'm gonna think earnings gonna be bad and sell my Tesla because of that. No. If I will buy more, but just if I have the money. But I won't sell going into earnings. I just don't think it's a good idea. Obviously, not financial advice. You guys need to do your own research. I'm not a financial advisor. I don't know your personal situation, so obviously, I was a bit disappointed to see this come back down, because I thought we did hit a low here, and then we saw it increasing. Obviously, that is including regulatory credits, so it is very seasonal with the amount of regulatory credits they're getting in. Obviously, bit of a disappointment that they did achieve less automotive revenues, but they can't. 2024 has been a difficult year. They can't always grow, but there are a lot more, good parts in this report, as you guys can see. Storage deployed. That was another thing that was really, really good. We see the Cortex. They've got their 50k H100 training NVIDIA training clusters. So that's part of the 400% increase that we saw earlier on in the video. And now this is really interesting. Autopilot technology drove 5.94 million miles between accidents, compared to the US average of 0.7, because obviously you might look at that and see, 70 million compared to 5.94. No, it's 0.7. So that's 700k miles between a human driver, and Tesla is at 5.94 million miles. So that's nearly a 10 times improvement over human drivers. And obviously then it needs to be that much better before they can allow, full self-driving to be pushed out, because obviously, as Elon said in the earnings call, if they basically mess up, it's gonna push back like regulatory frameworks when it comes to the rollout and adoption of just driverless cars, just because even though Tesla has the data, governments and news, and people will just put fear and say, oh no, it's not going to do, it's not safe, even though Tesla has data. But obviously people will say, oh no, they've made that data up, so they need to make it as safe as possible, and they've put an emphasis on that because they're going to be very cautious. The thing that sent the stock, because the stock was like 2%, 3%, up, they just based off this report, or sent it to the 4%, even higher. It has come back down since then. Was the fact that Elon said, obviously, most of the times in earnings reports we just get the same repeat. Not really too much. We get a lot of repeat from previous earnings reports, but each earnings report we get like a little bit extra. And this time round, that was the fact that they're pretty much on track for starting to release full self-driving cars in Austin in June. Now, I think that'll be the end of June, but still, that is 5-6 months away. So obviously, that I expect there'll be some delays, but even if it's been delayed a couple months, that is insane. And obviously, California will probably be a couple months after that. So they're being very cautious with the rollout, as for points I've said earlier. We can see that the million miles or billions miles driven, of FSD, and it's just continue to increase. So that's good. What else have we got here? So this was another thing. Like people will say, oh yeah, Tesla won't be able to get to high volume because the average price of their car is like 40 like 45. Most of their cars are around 45. If you look at the Model Y, it's about a bit higher than that. Model 3 is a bit lower than that. So about $45,000 is kind of the average cost of the new Tesla, and they have been lowering their prices, but so if we can continue to get them to lower their prices from that level while still remaining profitable. Obviously, profitability isn't their main goal, because they can, like Elon said in the past, they can sell it for zero margin and then just make the money from the FSD of people just buying it, because it will get to a point where it's that good. Obviously, in most of the world, it doesn't have that appeal because FSD is really only in the US. So in Europe and like Australia and elsewhere, they still do have to make a profit on their cars, because they don't have so much money where they can lose money just to get vehicles out in other parts of the world. They can kind of do that in the US, but I think they're taking a great approach in terms of trying to lower prices to get more customers, but then also make sure they still have some profitability to run the day-to-day business. So and here to go. Yeah, here's the new Model Y refresh, which I didn't like it when it first came out, but when you like, the more you look at it, you can just see. Obviously, the face was a lot better, but I preferred the old boot, but just because this is kind of like a bit flat at the back, and this is more. But then obviously this was initially made for just to suit the Chinese market, because obviously that's a massive market, total addressable market. So they want to make sure it almost suits them the most. But yeah, generally, yeah, this is a great car from the looks of it. I really want one, but obviously I'm just spending all my money on Tesla stocks, so I'm not actually can't afford a Tesla right now. But yeah, no, this is nice to see again. There generally is a seasonal drop when it comes to Q4 to Q1, so I would expect another drop going into 2025 Q1. But it is nice to see that we probably have bottomed out here in Q1 of 2024. So even if these net income and adjusted EBITDA, if it stays above that level of the Q2 2024, that I'll be massively happy with that. That will be that will be the real goal for Tesla to hit in Q1, to see if it can maintain profitability levels of Q2 2024. That's kind of what I'm looking out for in the next earnings report. So with the financial statement, we see automotive sales have a little bit lower than previous year, but again they've made up for it with sales extra revenue in energy. Now what I don't quite understand is they said they're battery constrained, but they're also massively increasing megawatt hours, so their energy business, so they're almost taking from the car business to put into the energy business, which if the energy business is more profitable, then I would say, and it probably is on a unit basis compared to cars, but then if you account for the extra value a car has in terms of gathering the data for full self-driving, I would probably still try and focus on cars. But maybe Tesla have enough cars going out, and and the data isn't really the issue for full self-driving. So obviously they have more inside information than I do, so I'm just going to assume that they are handling it perfectly like they normally do. Cash and cash equivalents, a new high level. That's really good. Obviously, you do have to minus out, costs of that, so that's not completely liquid. But yeah, it's a good sign that the cash flow, the difference between this, that is increasing. So there is some buffer there. And that looks like the main part of it. So if you guys liked my quick review of the earnings report, let me know if you want me to go more in depth into the earnings call, because I have kind of covered some topics that we'll discuss. But if you want me to go to a separate video where I go, talk about more what was said on the earnings call, please let me know down below. Anyway, guys, thank you guys so much for watching. Please remember to like, subscribe, and I'll see you in the next one. Goodbye.